Hi guys, welcome again to Proving the Market. This is KojaxPro. Today is Monday and I don't particularly like trading on Mondays. That's just because there isn't much activity going on in the Forex market on Mondays, except you're the kind of trader that loves to scalp. Now for this week, we'll be doing something a little different. We used to come in here to dissect our charts in terms of going through the likely setups that might emerge for this week from our watch list. But today we'll be starting our analysis with two other financial instruments, and these are NASDAQ and the US30. Now, the reason why I'm starting with these two first before we eventually go into our watch list and our internet setups for this week, just because you guys wanted it from the comment section. I got that some of you want to know the direction of NASDAQ and the US30. So without wasting much time, we'll go into that. If you're new to this channel, just go ahead and subscribe to the channel because we get a lot of value and insights from this. These setups basically will give you the right direction to trade so that you know where to place your trades and trade properly. So let's get into the charts. So this is the NASDAQ 100. The first thing we want to do, like I told you guys, is to first of all come on the monthly charts. So, on the daily chart, we could see that the market was rising, but on the monthly chart, we even see it clearer than that. So you can see that these charts, it's very well condensed because it's a monthly chart. And if I should draw a trend line, you can see the market has been moving up to the upside. So the NASDAQ 100 is basically the 100 of the non-financial driven companies in the United States. And most times the NASDAQ 100 is usually volatile, very volatile and full of momentum. So if you're the kind of trader that loves to trade extremely volatile markets, the NASDAQ 100 is going to offer you that. And we've seen now that NAS 100 is going to the upside. So we are only coming to the monthly time frame to see exactly where the market is going. So in this case, we're bullish. And next thing we do is to scale to the weekly time frame. Basically, what we do in the weekly time frame is to see if we've got any chart patterns and then eventually plot our key levels. So we'll start by plotting our key levels first. I'll just do this quickly. Now I see a reaction here. I see a reaction here, and also I see a reaction right about here. So this gives me a region as to where to put my key level. So I'm just going to put that there and make it line up nicely. So this is basically how I plot my key levels. Now using that same logic, I'll do the same for this part. We've got two rejections up right about here. So I'll just plot all of them nicely like so. So basically this is where we are on the NASDAQ, and we are having a bullish move to the upside. Now also on the weekly time frame, we can see that even when we do plot our trend line on the weekly time frame, we still have a very steep bullish trend to the upside. So we are bullish anyhow you want to see it, that NASDAQ 100 is bullish. Now we've gotten that in the bag. We've seen that this was the next push above this key level. That's why we've clearly drawn our key levels. Now I'm going to show you guys how to know where exactly the next key level. We've run into a bear land, and usually at this point a lot of traders are scared because when you look sideways or you look back, you see that price has not made this high before in history. So this is about the only high, and there's really no way to understand how to get a key level right about there. So the only way I do this is to use the ABCD pattern. So ABCD pattern is simply this concept in trading where A to B will be equal to C to D. So far B to C makes at least half the distance between A to B. So this is D and this is C. This is B. And right down here we have our A. So A to B to C to D. So whenever the market has an impulsive move to the upside, that forms your A to B distance. Now, if B to C makes at least half the distance between A to B, then it qualifies it for the next push. Now, ideally, C to D is going to be the same distance as A to B. As simple as that. So when we use that concept now and look at this chart right about here, we're doing this on the weekly time frame. So when we do that, you can see that we had a push right about here, from this push all the way to this push. Now it's made at least half the distance, So ideally, where is the next point going to go to? So we're going to calculate it now to see the exact distance. So I'll use my trend line tool to measure that. So this is A to B, and I'll just clone it. Now this is going to be C to D. So ideally we're expecting the market to get to this level right about here, which almost nearly coincides with where it's got into. So we might still have an extra push. We never can tell. We might still have an extra push, but then we are seeing that the market is rejecting right about here. So for charting purposes, I'm just going to put a bar right about here. So the market has gotten to that level and has begun to reject the downside. Now, I told you guys that pullbacks are not reversals. This market isn't reversing because the overall trend is bullish. This market is simply breathing, is giving traders the opportunity to enter their pullbacks. Now, what's going to be the depth of this pullback? Now, I've told you guys in my previous video that pullbacks can go as far as either a Fibonacci area, a traditional trend key zone area, or your usual support and resistance levels. So in this case, we had this support level right about here. We broke out above it. We've not had a proper retest of this level. So ideally, we are expecting the NAS100 to come back right about to this zone and give us a proper retest before we can now resume the push to the upside. So it's not done that yet, and it's about doing that. That's why it looks as though the mark stack is selling for the meantime. Now we've come over to the daily time frame. The daily time frame is clear and simple. Given that we have made that projection, the market has come to this region right about here and has rejected. We are seeing swings. You see these swings all the way to the upside. The market is going to likely react about them, but we're not going to be really bothered. As a matter of fact, I'm not going to lie to you. So this is going to be a daily zone, and the market might likely come and react around here. Just like, let's see whether it's gotten there. Oh, it's gotten there already, and it's seeming to react about here. Now, I will not be too keen on getting into trades at this point because they'll be somewhat premature. So what I'll wait is to see what the market does around this area, like nicely. Then I'll know for sure what or how to enter into a trade. Now, if peradventure this level does not hold, which I think it wouldn't, then just know that we are coming all the way down here as expected. Now, if we do come here, then this level will be a better place for a good rebound to the upside. So that's how I'm looking at the NASDAQ, and where I'll be taking these entries are in the 4-hour time frame. I don't take the entries on the daily time frame, except the daily time frame gives us a real reversal candlestick pattern around a key zone. So if we get to this level and I see a bullish engulfing candle like straight off this zone, like so, if I see a bullish engulfing candle in that manner, then I might be poised to get into a trade, and that's how to enter this market. Now, this is also subject to the market conditions as at when it gets there. So when it gets there, I will update you guys on how to get into this trade. Now, if you're struggling with your entries and you don't know exactly how to get into the market, then you might likely miss out on this. And in order not to do that, I've actually created a free masterclass for you guys, for beginners and struggling traders, to be able to see the market for what it truly is, understand price action to EST, and then be able to take your trades confidently and become consistently profitable. Now, the only way to do that is to use the knowledge you're going to get from the masterclass and then apply it to your trading. As simple as that. When you see real nuggets from a pro trader, you apply it, you get the results of a pro trader. As simple as that. Go to the link of this video and join the masterclass and trade the right way. Now let's get back into the chart. So that's all about the NAS100, and that's what I'm expecting for NAS100. We are not reversing. The market can get here, like I said, like it's gotten to this level and it seems to be rejecting. I mean, if you go to the 4-hour time frame, you will see that the market is rejecting right about there, but it's not giving us a good signal for a proper rejection. That's why we're going to be patient and wait to see what it does around this level. Now, this level, if it doesn't hold, is going to come back here, and that's where I'll be ready to pull my trigger. And that's it on the NAS100. So the NAS100 is all-time bullish. Medium term, we are retracing, so we are just pulling back, and pullbacks help us enter trades. Now let's get into the next pair we'll be discussing. So the next pair we'll be discussing is the US30. So for the US30, let's see what the US30 is doing. So simply we'll go over to the monthly time frame and then see what the monthly time frame is doing. So we've seen now that the monthly time frame is still going to the upside. I mean, it doesn't take a soothsayer to know that this market is moving to the upside because we're making high highs and high lows. We've seen this on the monthly time frame. We've acknowledged that, and we'll just likely put a trend line just to see. So we'll put this trend line right about here and then go over to the weekly time frame. So what we do in the weekly time frame is still similar to what we've always been doing and how we approach this market. So we will plot our key levels now on the weekly time frame. So this is going to be a level. I'm not going to waste time on it. So this is going to be a level. Now we'll plot the next one. We've got a level right about here. Market reacted like 3 times and that area, and then we've had this push. So we are back to the same scenario we had in Nasdaq. We've had this push to the upside, and the market has retraced back to this area. So now it's retraced back to this area. This push is now going to give birth to the next likely key zone that we are going to react around. So because we are trading in Bay Area, we need to know the next likely zone, and the only way to do that is to simply clone this, clone it, place it at the retracement, the end of the retracement right about here, and then allow it to go to the upside. Now at this region, we are going to likely expect reaction. So I'm just going to put it back right about there. Now take this off and take this off. Now we can see where US30 is coming to, and currently we are trading at 46,357.00 basis points, and we are expecting the overall target for the US30 to be 50,952.04 basis points. So we've not gotten there yet, means the market still has more room to the upside. We've broken out nicely. So this is a key level. We've broken out nicely on this level and we are moving to the upside. Now, we have not seen any chart patterns to negate the movement to the upside. Now, all we do is to go over to the daily time frame to see exactly what is happening on the daily time frame. Now, you see that we were moving all the way to the upside. We have not had any tangible pullback until this one. This one seems to be a nice pullback. I mean, we tried to pull back here. It didn't really get to this monthly zone, and then we continue moving to the upside. We can see this pullback is now steeper than this one. And the reason being that we were making higher highs and higher lows here. Market broke structure right about here and has continued to move to the downside. So now it's broken below here. We've had somewhat of a change of character. Now, if this holds, this market is going to come all the way down and give us that proper retest that we want. And once that proper retest happens and the market holds around here, pretty much similar to what we're expecting on the NASDAQ 100, then I'll be confident to enter more trades where to the upside. And the reason why we're going to the upside is because the monthly time frame says it. So we only take trades in the direction of the higher time frame. So the monthly time frame on the US30 shows that we are bullish. I have no business taking bearish trades. You keep your trading simple, you get simple results, and you keep your trading professional. So now we've broken below here. I'll be expecting more room to the downside. This is going to be a nice trade to take. I mean, if this trend line, if this counter trend line can see the US30 all the way down here, then I'll be confident to take trades to the upside. Now, see what the risk reward on this kind of trade would seem like. So if we do come around this region, right about this region, which is the monthly zone, and reject nicely here, and we're able to get into a trade to the upside. So we'll be getting into this trade like so, take our first take profit somewhere around here. So we're going to take this out. So we'll take our first take profit somewhere around here, which is the 100% retracement. It gives us a solid risk reward of 1:3. Then if we aim to our overall target, which is that green bar right about there, we see that we get a risk reward of almost 1:6. This is 1:5.9, and that's a handsome risk reward on this trade. So for now, the US30 has not given us the inkling to move in that direction, and I'll be waiting to actually take this kind of trade. I'm not used to trading these pairs. I'm just analyzing these pairs to show you guys intended direction. And if I do trade this pair, I'll be watching it because now I have actually looked at it. If the setup is juicy, then I will definitely hop into this trade. If the setup is not juicy, I'll skip it. But you guys that are used to trading the Dow Jones 30 and the NAS100, this is how you should be placing your trades. Only place your trades in the direction of the higher time frames. So the NAS100 is bullish, be looking for bullish trades. Don't look for sell trades. The US30 is bullish, be looking for bullish trades. Don't look for sell trades until the chart tells you otherwise. So currently the chart is in sync with what the higher time frame is saying, and we'll take trades to the upside. Now that's it on those pairs, and make sure you trade wisely, guys, on these pairs. Now we'll go over to our watch list, and then we'll see what we have for this week, and I will breeze through them quickly to see whether we are having any setup at the moment. So for Euro USD, which is the first one, we have come below this daily level and we have broken nicely below it. Now all I need is a retest right about here. Now you can see that this trend line saw Euro USD to the downside. Now we have come to the downside. Price broke above the trend line and broke above this daily zone, which is a tentative area. It broke above this daily zone and has come back to trade below it. All I need is a good retest right about here. I will scale to my lower time frames and take my trades downwards. And the reason why I want to trade Euro USD to the downside, so all I'm waiting for is a setup like this, and then I'll take it down. Now the reason why I'm trading to the downside on Euro USD is because a chart pattern formed on the weekly time frame, which is a double top, and then this yellow bar which you see around here, right about here, is the neckline. So if we go over to the weekly time frame, you will see what we're talking about. So you can see clearly that this is a double top. This is the left top, and then this is the right top. This is the neckline, and price has broken below it and has eventually decided to stay below it with this bullish engulfing candle on the weekly time frame. So this is a bullish engulfing candle back into that zone on the weekly time frame. So all I wait for is a good retest, like I've told you, on the 4-hour time frame, to be able to take this trade. So it's not giving us that setup, and until it does that, I'll be standing off my hands on Euro USD. For now, my inkling for Euro USD is to the downside. However, because the market is still playing around this trend line right about here, and I expect a proper retest on this zone, I'm not going to be trading Euro USD. I'll wait for the market to tell me what it wants to do. And then once we get our setup, we get into this trade. As simple as that. The next pair we're looking at is GBP USD. Now GBP USD might be doing something similar to Euro USD, but it all depends on if we are going to have a setup. Now we're expecting GBP USD to come all the way up, but you can see it broke this counter trend line and it's not giving us that. GBP USD, if you ask me, whenever it makes these premature breaks and doesn't really pull back to where we want it to pull back or where we're anticipating to take our trades, all I'll do is just to leave the chart to do its thing. So in this case now, GBP USD, the way I'm seeing it, it might likely still pull back to this region. I mean, GBP USD and Euro USD moves about the same way because they are kind of inversely paired with the dollar index. So whenever the dollar index is going down, these pairs go up and vice versa. So we might still see pullbacks all the way to the upside for GBP USD in this fashion. Now, if this happens, then I will still be confident to take a trade. Whenever we do react around here and get our setup, I'll take a trade back to the downside. It's not yet gone. I mean, it didn't give us the kind of pullback we want. Maybe it wants a wider kind of pullback, and that's just the market. It does its thing. Now, this teaches you guys a lesson. When you have a setup and the market doesn't respect your setup, don't think that there is something faulty about that setup. It's just the market doing its thing, and if your setup doesn't click, it means the market is not yet ready to give you that setup. As simple as that. I mean, you should interpret these things at face value. Don't attach so much importance to it, because whenever your setup does emerge and then you take it, you will see better results with your trading. So for now, GBP USD, when it does give us a setup, we'll get into this trade. Now the next pair is Bitcoin. Now, you guys know that I made my predictions for Bitcoin, and the last time I came here, I told you that Bitcoin will eventually get to $76,219 per coin, and after we broke below this level, now we've broken below this level, and you can see our simulation to right about here that for me to get into this down trade, which is going to be a proper bearish trade for Bitcoin, I will need a proper retest. Now let's see whether we've gotten a proper retest. We didn't really get a proper retest. You can see that the market, I'm just going to take this out. See the market broke and just kept on coming out to the downside. Now we are getting the first sign of a proper pullback right about here. So all I need is for Bitcoin to come here, reject, and then if our setup emerges, then I'll be able to take Bitcoin to the downside. As simple as that. Trading doesn't need to work hard. I mean, I come here to show you guys transparently how to be taking these trades and how to position yourself for proper wins. You don't need to complicate your charts. You don't need to complicate your analysis. Just follow this analysis and you'll be able to take and make money from this market. So Bitcoin eventually will come to $76,219 per coin. But currently we seem to be pulling back momentarily just to this level. Now when we get to this level, we'll see what Bitcoin wants to do. Now the only time this setup will be validated is if we break above here. If we do break back above this zone, then the whole setup is invalidated. We'll come back and reanalyze it to see what Bitcoin wants to do. As simple as that, because no one has a 100% or a perfect setup or a perfect direction of the market. The market does what it wants to do. So it's good to place yourself on the right side of the market, which is what we are doing by following this KojaxPro trading system, because all I'm showing you guys is actually how to trade this market the right way. Now, if we do break above here, then I will come back and review BTC. So currently, this is my take on BTC. All I need is for the market to get to this level and then come back, and then I'll be able to take this trade to the downside. As simple as that. Now, the next pair we're looking at is GBPJPY. Now, GBPJPY, I told you guys that GBPJPY was going to break above this level, which it did right about here. So GBPJPY broke this level right about here and then retested it and continued moving to the upside. In my last video, I said because of this candlestick pattern, which looks like a tweezer bottom right about here, GBP might continue to move to the upside, but I categorically said I will not be getting into this trade. Reason being, this is just too high to take a buy trade. But you can see clearly that the market still went all the way to the upside. So sometimes the market will do what it wants to do, but your setup might not emerge. The market will go to where you expect it to get to, but without you. That's the irony of trading. Sometimes your setup emerges, sometimes it doesn't. And you shouldn't beat yourself up when you don't get into these trades. The only problem is when you try to force the trades by taking a setup that's not yours. Now, when you're taking a setup that's not yours, it means you're not disciplined. And the market punishes randomness. So do not take random trades. Only take trades that you have planned in your trading plan, in your trading journal, in your trading setup. So that's how to trade properly. Now you can see clearly now that GBPJPY has come to the 100% retracement, which is this level, and broken above it. Now, like I always love to trade, I'll need this market to sustain above this level and then give us a setup. But you can see it's not doing that right about now. And since it's not doing that, all I'll do is I'll wait for a proper higher low. So this market has moved, has broken above here like so, and it's coming down to retest. So this might be premature to take this until it gets to somewhere here, at least half the distance. Remember the ABCD pattern I told you? At least half the distance. So the market is already doing something similar to that, but I'm still not convinced to enter this trade until we get somewhere right about here. So this is going to make it half the distance. And you can see that we have 3 levels marked up here. So this is the first level. So this is the second level. And then if we clone it again, and this is the third level. So we can see 3 levels are lined up here. So that's why I'm very particular about this zone. So I'm just going to put take this level out and then put a yellow bar right about there. So if the market comes here properly and holds and gives us a setup, I will likely take this trade, but I'm going to reduce my risk. The reason being that we are trading below the 100% retracement, which is this level right about here. We are trading below this green line. So this green line is iconic. It's the 100% retracement, whether you like it or not. And if you're taking trades below the 100% retracement, even if you're following price action and you're trading below the 100% retracement, it's risky. But then I'll be willing to take this trade only if I reduce my risk. So ideally, if I'm raising 3%, I'll bring it down to 1%. If I'm trading 1%, I'll bring it down to 0.5% on this trade. As simple as that. Now, GBPJPY, that's what it is. If we do get a setup right about here and hold, I will take it back to the upside. So the next pair is GBPNZD. So GBPNZD, my setup is about to emerge. I mean, we've broken right above here. You can see my previous simulation, which is what I'm still going to put here. The market needs to break above and retest. So I've only broken above them, but we have come back below it with this red candle. So you can see the red candle, this red candle right about here shows that we have not completely cleared this level, and I'll wait till that happens to take GBP and NZD to the upside. And why I'm trading GBP and NZD to the upside is because the overall bias is bullish. As simple as that. Now let's see what USD is about doing. Now you can see that we've waited patiently, I mean for the longest time for this to happen. It's not yet happened, and our simulation is right about here. All I need for USD now, this is usually on a weekly time frame. This is a chart pattern. I mean, this is a range, a chart pattern of triple top, and then this is the neckline. I need USD to break above this. We're beginning to see some bullish momentum. We saw that from last week on USD Now, let this momentum sustain and eventually clear this level. Then we'll have spaces all the way to the upside. And why I want to trade USD to the upside is because these chart patterns are reversal patterns. It's reversing this entire trend, which has been bearish. It's going to reverse this entire trend to the upside, even if it's momentarily. So once we do hold above this level, after breaking above it, my next target will be this monthly level right about here. As simple as that. So we'll be keeping a close eye on USD and we'll come back to it later. So there isn't much to talk about on AUD/USD and NZD/USD. That brings us to the end of this video, and that's to show you guys how to trade these Forex pairs the right way. If you follow these nuggets, you'll be able to trade properly. Now, make sure you do subscribe to the channel for more updates like this, because I drop them weekly. And if you are interested in trading the right way, you love this kind of trading setup, you love this kind of trading system, and you want to trade like this, I've got a program for you that teaches you exactly how to do that. The exact way I do that. It's a program by me, and you are going to see it in the description of this video. Go to the description video and click on it and join the program. Now, see you guys in my next video. Bye.